Yeah, hi, this is Mark for Right Line Trading. And what I wanted to do in this second educational video was to review with you individually each of our different entries and explain again market setups and the rationale for taking each one of them. And the first entry that we're going to discuss is going to be the C continuation entry, or the ABC formation. Now, the ABC continuation does have an element of Elliott wave in it. It just sort of has a tincture of Elliott wave, but it's really a market structure setup based on order flow and market symmetry. Now, if we look at the ABC continuation trade, the first thing that's important is that we get the A. And the A, which is obscured here by this order flow asymmetry signal, occurs right here. And I'm going to place an arrow line here. Now, an A is the beginning of any trend, and the trend consists of any two candles of the same color that occur in continuity. So if you have two blue candles in a row, you have a confirmed uptrend at candle close. Two red candles, right here, is a confirmed downtrend. So the market moves up, and then we get a B candle, and the B candle is always colored purple. And what the B candle tells you is you have buyers streaming into the market here. Sellers then try to turn the market and try to bring it down. And then, in order for there to be confirmed C, the C must engulf the B candle. Now, by Steve Nissen's definition, an engulfing candle only involves the body of the candle. The wick is not important. So the body of candle C, the low must equal or exceed the low, and the high must equal or exceed the high of candle B. Now, what this tells you is that all the sellers trapped in the wrong direction are going to get stopped out as the move continues to the upside. So you have two impulses pushing this market up. You have the addition of buyers, and all the sellers trapped in the wrong direction will have their positions closed, and as their sell positions are closed, they will buy back their contracts, adding more buyers to the mix. And this is going to provide a tremendous push to the market to move higher. Now, what we try to do is we try to take very conservative entries. And the most conservative entry is the first C candle of every single move. The second candle, on the second candle, the move may be extended. Now, if we again go back to Elliott wave, of which I've tried to give a flavor to here, here's that AB impulse, the BC, and the CD is the long wave, is the one that you want to catch that really shoots the market up. And that's the longest of the three impulses, and the first of the first three in the Elliott wave complex. And that only is going to occur one time in every single move. Now, this is a continuation trade. Now, what makes this even more powerful is that we hope it's going to come with order flow, momentum, and stochastic all with us. So this makes this ABC pattern the most conservative, and I believe the most powerful trade in our arsenal. Now you can see here we're above the 50. The right line trend line is green, and we get the A, B, C, and we're off to the upside. Now a second pivot C is going to be much more risky, and as part of our right line trading dogma, we don't trade second pivot Cs. Now, occasionally, a second pivot is so perfect in setup, it's worth the additional risk. And remember, every move has a positive predictive value. The positive predictive value is of a first pivot C when you're above the 50, above the 15, the 15's green, in this kind of setup is much greater than 90%. First target to 6 ticks, tremendous percentage of winners. So let's take a look at some other ABC continuation trades. Now here we are on gold, and here we have an awesome ABC continuation trade. And the setup is right here. Now, let me mark it out for you and show you specifically the components of the trade. Now, here we are. The A starts here, and let me mark out this A for you. The A starts here with the confirmation of 2 candles of the same color moving to the upside. Now, the software looks at the hanging man, which really is a candle without a body, as an up candle. And then you get a third up candle. You then have sellers come in and try to push the market down. They're engulfed by buyers to the upside. You have order flow, momentum, and stochastic in your direction. Here, at the close of the C candle, you're green, green, green on our 3-line indicator. You're above the 50. Now, in this particular case, the modified 15, the right line trend line, has not yet crossed the 50. Now, what we like in very conservative trades, and we try to take only conservative trades, is for the modified 15 to have crossed the 50. But when we're right above the 50 period moving average, and it's acting as direct support for the trade, and the setup has this much going for it, as long as the modified 15 is green and pushing up hard as it is here, we give that particular component of the trade a little bit of leeway. So as I said, you can see that the 3-line indicator is green, green, green. We have tremendous market structure, and as you can see, the modified 15, the right line trend line, is pressing up hard on the trade. Now we have no overhead resistance to the first target, and this is just a tremendous trade. Now we don't see many of these in the course of the day, maybe 2. But these are the bread and butter trades, and when you see these are the ones you definitely want to jump on and you definitely want to take. Now the A starts to flash automatically. The software provides you with the information that an A is coming. The A is confirmed when you have 2 candles of the same color that occur in continuity. The B will flash and will confirm when you get a pullback bar. Then the C will flash, and I kind of covered it over here with this arrow, and print when you get a confirmed engulfing candle. So when you see the potential for an engulfer to the upside and the C flashing, you simply put in a buy limit or a buy stop, depending upon which one you want to do. 1 tick above the close of the C. You already know what the close is going to be because the right line range maker is going to estimate the close of the candle. the order is waiting and you're off to the upside. And this is your perfect ABC continuation move to the upside. And you can see the component of Elliott wave. The AB move, the BC move, and then the CD is the long move or the big Elliott wave impulse. Now let's take a look at an ABC continuation trade to the downside. Now unfortunately the letters which are on the chart are simply obscured by, these are momentum signals, these are power entries, and we're going to go over those later on in the video. But the letters are on the chart. If the magenta candle is there, the ABC continuation is functioning. So let's take a look at this trade as it matures to the downside. So here's the next ABC continuation trade that we're going to take a look at. This is on gold, and you can see that we have a confirmed move to the downside. Red candle, A prints. Now the A is here. What we're doing is we're just getting other signals which are obscuring them a little bit. In real time, you would clearly be able to see both signals. The market moves down. The B comes. And this comes with an order flow asymmetry signal, which we'll talk about later. I want to take each individual signal at a time in this particular video. Then all the buyers, which are clustered at the top of the candle, because this order flow asymmetry tells us that we have buyers at the top of the candle, are then swamped by an engulfing candle to the downside. And we have a very, very powerful short signal. Now, we have the right line trend line below the 50, the market's below the 50, price action's below the 50. The right line trend line is red and pushing down, and this is probably the most powerful continuation signal that I know of. Now this comes with additional confirmation. You also get a momentum signal, which is the red X. This tells you that momentum is now aligning on multiple time frames. And this is in addition, and you can see the candle is rimmed in yellow, which tells you that both order flow, stochastic, and momentum are also aligned to the downside. And this trade, I would say, has a 95% or greater positive predictive value of becoming a successful short, or at least getting to your first target. And in fact, it really only got you to your first target because the market came up and in a perfect momentum signal, which I'll talk about next, gave you a trend signal to take to continue the trade to the downside. So I hope that it's very clear exactly what we're looking for on the ABC continuation. Now these almost always come, since there's no deep pullback, these almost always come with order flow, momentum, and stochastic in your favor. If they, which is an important component of this trade, they must come if they're short below the 50 with the right line trend line red, and if they're above the 50, they must come. If they're long, they must come above the 50 with the right line trend line green. If all of those things align, you have yourself a perfect ABC continuation trade. Now I did want to show one more ABC continuation trade and show you exactly what I mean by trading a second pivot. Now here is the A, confirmation of an uptrend, pullback. Now the pullback comes with an order flow asymmetry signal, which makes the pullback even more powerful when it fails, because not only are there a lot of sellers in this down candle, but the sellers are all at the bottom of the candle, which means they're going to get stopped out faster. Now the C candle comes above the 50, The 15 is pressing up hard. It's not quite above, but market structure makes this trade really, really terrific. You also have a momentum signal, which is the X. Now, as it sometimes happens, you have momentum and you have order flow with you. But if you look at the 3 line, stochastic is turned, but that's okay as long as you have 2 of the 3 components with you on a deep pullback on the close of this candle. You have short-term stochastic with you, long-term stochastic against you, but there's just too much in this trade to pass up. And the move goes to the upside, and you get yourself, I believe, probably 10 ticks or a little bit more. Now you have a second pivot C, and this is the C we will not trade because this is really not part of the Elliott wave flavor of the move. The Elliott wave flavor or the Elliott wave component of this move says that this is the CD wave here, and the second pivot C, although it comes with confirmation of order flow, stochastic, and momentum, you're above the 50 and above the 15, and the right line trend line is green and heading up, is simply a C in a move that's simply too extended. And based on Elliott wave principles, this is not where you're going to get that big CD extension. And I'm not going to really check because it's not, well, let's see if you squeaked out a first target. The high of the move is 1320.9. You'd be in at 1321. The high of the move is 1321.8. So you would have gotten 8 ticks and your first target is 6. But this is a much, much riskier entry than taking your first pivot C. So I wanted to make that really clear so that everybody understands the difference between a first pivot C and a second pivot C in a continuation trade to the upside. Same thing is true on a continuation trade to the downside. Now the second entry is called a power entry, and it's depicted graphically on the chart by either a green up candle or a red down candle. Now a power entry is really a pullback into an intact trend. It's where you get a minor retracement, but all the major structural components of the trend are still intact. So we have a move to the upside. We have a very deep retracement. And the retracement comes right back into the modified 15. And in this particular case, which makes this trade quite powerful, the retracement is also into this gold trend line, which is the 100 period moving average. Now, during the retracement, we remain above the 50. The right line trend line, the modified 15, stays green, and that's critical. You cannot take a power entry if the modified right line trend line or the right line trend line, the modified 15, has changed color. Now, oftentimes, this retracement is so deep, it's going to change the color of one of the 3 lines of the 3-line indicator. And if you look at the 3 line, it has changed the color of stochastic. At the close of the candle, stochastic is going to be orange, which means your long-term stochastic is down, your short-term stochastic is up. But we still have order flow and momentum with us. And what we have, what we have also with us, the most powerful component of the trade, is the structural setup remains intact. We remain above the 15, above the 50. I know I sound like a broken record. We still have order flow and we still have momentum with us to the upside, and we have ourselves a tremendous trade after we get a pullback into the 15. Now, these momentum retracement trades are extremely powerful as long as we adhere to the rules. Now, the closer the retracement occurs to the 50, the higher the probability that the retracement is going to be successful. And just like the ABC continuation trade, the first retracement is always the most powerful. As you start getting multiple retracements, the move becomes extended, and the probability of it becoming successful becomes less. So it's that first retracement in a trend like this, with a power entry to the upside, that has a positive predictive value of over 90% for hitting your first target, and hopefully second, and hopefully getting a nice runner on the trade. Now, right here on the chart, without even moving it, is where we never take the power entry. We get a nice retracement here, but we're retracing back into a yellow right line trend line. And remember, this is a retracement into an intact trend. You're retracing here into a trendless market. And that's what the yellow right line trend line is telling us, that we have no trend present. So we're not going to take a power entry or a move or a continuation move to the upside when we don't have an uptrend. Now, I wanted to show these two signals. The power entry is really a very, very powerful signal. Here's a power entry long. Here's a power entry signal long. Now, this power entry signal long is coming against order flow momentum and stochastic. Market structure is perfect, and the trade was a really nice winner. But again, this is a risky trade, and one that's has the potential for coming right back against you. Look at this power entry here. Yellow, right line trend at candle close. Stochastic is red. Key is we don't have any uptrend, and it comes down and stops you out. Here it's successful. Here again, flat right line trend line. You have momentum and order flow with you, and up it goes. But we don't want to take iffy trades or maybe trades. What we want to take is a pullback into an intact trend for a continuation move to the upside, and those are the trades that have a very high predictive value of being successful. Now, here we have two great power entry signals to the downside. Now, the first power entry comes after a very, very deep pullback. And this retracement is so deep that it serves to turn the three line. It serves to turn momentum and stochastic. Order flow and stochastic. But at candle close, momentum is with us, and structurally, this is just a tremendous trade. Deep retracements will turn the three line. But based on market structure and the fact that this is a very powerful continuation signal, we would go short one tick below the close of this candle, and we'd be down to here. And here's where structure dictates. Remember, this is not an Elliott wave-based signal, and we can take a second signal. Here we have a retracement where order flow, momentum, and stochastic are with us. Trend is intact. Down we go again. Here power entry is into a yellow trend line at close, we don't take it. We never trade when price is between the modified 15 and the 50. No trade. Again, we never trade when price action is between the modified 15 and the 50. No trade. So with just a few of our right line rules, we filter in the appropriate perfect setups, take them down, appropriate setup, down, and easily filter out the trades that really are setups that have a very low predictive value, which are simply doomed to failure. Trading between the 50 and the modified 15 is something that we never do, irrespective of the signal. And remember, below the 50, we always take the trade to the short side. Now, if you just take the ABC continuation signals and the power entries that are below the 50, below the 15, where the right line trend line is red short, and above the 50 and above the modified 15, it's another power entry. I may have shown you that before, right here. You can really wind up making a significant amount of profit. But we have a third signal, and it's called a momentum signal. And that momentum signal occurs when momentum aligns on multiple time frames. But the momentum signal takes a little bit of time to adjust to. Because remember, every time there's a significant move to the upside, eventually momentum is going to align on multiple time frames and fire a momentum signal. And the one thing that we don't ever do is we don't chase the market. If we chase price action, it's going to come back and bite us. What we want to do is we want to make price come to us and fire off a signal when we get a pullback. And here is a perfect example of a great momentum call. Now we get a retracement, and we look for a retracement. You can see that here price stalls. You get an up candle, a down candle, then an up candle. So price seems to be moving laterally. It's in a little bit of a sideways channel. We're not chasing momentum up. It's not green candle, green candle, green candle, momentum signal. We have green candle, pullback candle, firing of a momentum signal close to the 15. Here is your entry to the upside. Again, excellent predictive value of success if you allow price to move laterally into the 15 and then fire on a validation of the up trade after a down candle. Now, because this is a retracement, we lose stochastic on the 3 line, but we have momentum and order flow, so we're still in very good shape in terms of fractal analysis of these 3 parameters. Let's take a look at another momentum signal. Right here, we have price again in a small sideways channel. Whoops. We get an up candle, pullback candle, green candle validates the continuation of the move to the upside with the firing of a momentum signal closer to the 15. When price was here, look at the distance between the candle and the 15. So all the way out to here. As things move sideways, now look at the distance. The market has moved into the 15, and you get a firing of the momentum signal. Now it's going to flash intra-bar. You're going to know that if this candle closes to the upside, you're going to put your order in one tick above the close of the high. You already know where that's going to be based on the right line range maker, and you're all set with your buy order, either your buy stop or your buy limit order, one tick above, and you're in, and off you go to the upside. Now here is a fabulous momentum signal to the downside. Now we see the channel. Market's moving sideways. And as it moves, we get a down candle, we get an up candle, we get a down candle, and with the firing of the down candle, we get the momentum signal. Looking for a first target, and we hit that easily. Now we didn't get much more than a first target, but listen, that's what we're looking for in every trade. Now with that momentum signal, we get order flow, stochastic, and momentum with us. That's just additional confirmation for the trade, and we're into the downside. So we don't chase momentum. We let the momentum signals come to us. That's the key to success in trading momentum signals. And I just wanted to provide you with an example of a momentum signal that we don't take. Now, even though this was a successful move, this would not be an advantageous call for you to go short on. Now, the power entry called the short trade here. Unfortunately, there are moves that we just can't take because the trade began with the right line trend line yellow. But every time there's a significant move to the downside or a significant move to the upside, you're going to get momentum firing, because eventually the momentum will align on multiple time frames and give you the signal. But if you wind up chasing momentum to the downside or chasing it to the upside, it's going to come back to haunt you, because it's going to stop you out many more times than it's going to be successful. So this is the kind of momentum signal, even though in this particular setup it's successful, is the kind that you simply don't want to chase. You want to see a down candle, an up candle, a confirmation down candle to the down candle with a movement laterally and into the modified 15 or the right line trend line. That's the momentum signal you want to take, and if you take those, your success rate is going to be extremely high. You just have to keep your eyes on the market, because these come up fast. Now here's the next signal we're going to look at, and this is the three-line indicator signal. Now these signals are best taken right around the 50. Now they usually come as confirmation signals on your power entry, your ABC continuation, or your momentum signal. But as a lone signal, when you get a break of the 50 and you see the candle become outlined in either yellow to the downside or blue to the upside, it tells you that the three-line indicator is down in both order flow, stochastic, and momentum. Now, usually when you first break the 50, the modified 15 will not have pushed down that hard yet, will not have pushed down past the 50 yet, but this is an early trade. Now, this is a little bit of a higher risk trade, but remember, we're looking for the probability of getting to a first target of or 6 ticks, and the chance that as you break the 50, full break means at least a 2/3 candle close below the 50 to the downside, with the modified 15 pressing down hard, even if it has not crossed the 50. This is going to be a successful trade. Now I can show you multiple examples of where this just turns out to be just a fabulous entry signal, and they almost always come just on the break of the 50. And look at that 50 break. In this particular case, you have order flow momentum. Well, order flow momentum and stochastic is with you. You're above the 50, above the modified 15, and it gives you a signal to take this trade all the way to the upside. Now, these candles almost have no wick, so this is a solid 50 or 60 move to the upside. Since there's no retracement, you're not going to get a power entry. There's no retracements, you're not going to get a C candle. And there's no retracements, you're not going to get a momentum signal. But because you get a first break of the 50, move to the upside, and at the close of the candle, you get a 3-line confirmation, off you go to the upside. Okay, let's take a look at a few more 3-line signals right here. Break of the 50. The 3-line is the modified 15 is just crossing. Beautiful trade to the downside. Another signal. Break of the 50. As we know, sometimes the 15, modified 15, is not quite crossed, but it's angling down, and it's heading down pretty strongly. 3-line we know is aligned. Now we can't take this B. This is an A, B, C pattern because it's right into the 50. And we don't trade into trend lines, and we don't trade into pivots. And we have to wait for a break of the 50 to the downside, which we get here with 3-line confirmation. We're in 1 tick below, and down we go. 3-line to the upside. Break of the 50, great support from the 50. 3-line obviously aligns. Up we go. Not a huge move, maybe 10 ticks. We'll take a 10-tick move. With this predictive value, this is a very solid trade with a very high probability of at least reaching your first target. Another 3-line signal. This candle just barely squeaks through the 50, but we don't get any confirmation for a trade to the downside. Remember, momentum, we want to go laterally into a red trend line. We don't have that here. Here we have a move to the downside, a break of the 50, 3-line confirmation, and down we go. These are very, very low-risk trades. We just can't chase these very far down. If we don't get the signal close to the 50, we don't take it. It's got to come, I would say, between 5 to 7 ticks between the 50, either to the upside or the downside. So you can see that we have lots and lots of signals that we can take. We just have to adhere to market structure rules and our right line trading rules, and we will wind up sifting through the different signals and only taking the ones that adhere to our trading strategy. And here is another great signal to the downside. It comes with a momentum signal as well. It's close to the 50. 15 is pressing down, and successful trade. Now, with every trade, we try to trade with order flow. Order flow is the top line, and when there's a predominance of executed buys over executed sells, the line is green. when that occurs across all time frames. When there's a predominance of executed buys long term only, then it's blue. When there's a predominance of executed sell orders on all time frames, it's red. When there's a predominance of executed sells long term only, when with a predominance of buyers short term, then it's orange. We have an okay to go short, orange or red, okay to go long, blue or green. But what I wanted to show you now was how we use the order flow asymmetry indicator. Now, the order flow asymmetry indicator is capable of calling some tremendous reversal signals, but we don't trade reversal signals. Reversal signals are very high risk, and although a significant number of market turns are called by this indicator, it's simply not enough for us to use as a single confirmation for a market reversal. And again, we don't, with the ABC continuation trade, with the power entry trade, with the momentum trade, with the three-line trade, these are all trading with the trend. And I recommend strongly that all traders trend trade and not try to counter trend trade. I mean, our goal with fractal analysis is to provide you with an assessment of not only the trend on your trading chart, but on multiple time frames. So we want to continue to take the trade with not just the short-term trend, but with the long-term trend. So let's see a great example of how we use the order flow asymmetry indicator. Now, the first way is we can use it as additional confirmation for a trade that already is confirmed by another signal. And here's a great example of that. You have a pullback into the trend. You not only get a power entry signal, you also get an order flow signal telling you that almost all the buyers are clustered at the top of the candle. This is a high volume candle, and almost all the buyers are at the top, along with the power entry. This is, again, added confirmation that this move is going to continue to the upside. But here is how we use it as a solo indicator. Now you can see that the B candle comes with an order flow signal to the downside, and that fails, and it comes with not only a C but a momentum signal to the upside. Now you're above the 50, above the modified 15 or the right line trend line. You get a momentum signal and a C engulfing candle. Now what this tells you is that most of the sellers are at the bottom of the candle, and they are simply speculating by placing their trade short at the bottom that the trade is going to continue to the downside. And when they turn out to be wrong, this market is going to get propelled up even faster. So when an order flow signal in the wrong direction is overrun by a sequential engulfing candle in the opposite direction, it just has that much more power to push it up. Now let me go over that again with a different trade. Here we see a perfect setup on the gold market. We see a move to the upside, and then we see sellers come in with an order flow signal here, so that most of the sellers are at the bottom of the candle. This is on the gold market. It's overrun by an engulfing candle to the upside, and you know that a lot of the sellers in this candle are going to get stopped out quickly because the majority are clustered at the bottom. Again, additional confirmation that this is going to power this trade in the direction we want it to. Now, we don't use the order flow asymmetry indicator as a sole signal to take to go long or short. Unlike the momentum signal, the power entry, the C candle, and the momentum signal and the three-line signal, which we can use as solo confirmation of trend continuation. The right line order flow asymmetry indicator is used as additional confirmation of trend trade continuation. Now, I hope that this has helped clarify our setups and the trades we have in our arsenal. If you simply learn a couple of setups and just get a couple of those trades down cold and get them under your belt, you can then continue on and expand your arsenal. When you get the ABC perfect, you can move on to the power entry. Then from the power entry to the momentum signal. From the momentum signal to the three-line signal. Now, with this platform, you're a real trader. You're not trading dummy signals. You're not getting a blue dot and a red dot. You're not letting a piece of software tell you when to go short or when to go long. And a piece of software is never going to be able to provide you with that information with any kind of accuracy, or the kind of accuracy that you require in order to become a profitable day trader. But if you learn pattern recognition and take the time to appropriately take the signals that this software provides you, there should be no reason why you can't be profitable on the market every single day. Now, all the trades that I showed you were from the gold market and the crude oil market, but this is operational on every single market, on every time frame, with every kind of candle. You can trade the ES, you can trade bonds, you can trade treasury notes, you can trade wheat, soybeans, grain, you can trade the Dow, the NASDAQ. It doesn't make any difference. I have recommendations for 8 range on gold and crude, 8 range on all the indices like the Dow, the NASDAQ, and the Russell. 3 range for the rotational markets like bonds, notes, and the ES. 5 range for the euro currency and grains. But if there are any questions, I'm here to answer them. You can call my office, send me information. We'll be happy to support you in any way we can. We'll post additional educational videos, and I anticipate your success as a professional day trader.